Good evening, everyone, and welcome to this presentation. We are Tharisa, a dual-listed platinum group metal and chrome miner listed on the LSE and the Johannesburg Stock Exchange. So when we were thinking about the presentation this evening, so we thought, you know, if we could leave you with one slide this evening, what would it be? And we came up with these 5 points really in terms of why one would look at Tharisa as an investment. First of all, there are very few listed companies in London that give you exposure to platinum group metals. And to that end, none that really have the exposure to the 4E platinum group metal basket that we have. It's unique in the sense that we have a very high rhodium content. And for those that have been following the prices, have seen some really unbelievable prices nearing almost $30,000 per ounce. And the graph on the top right-hand side illustrates those 6 elements of platinum group metals, being platinum, palladium, rhodium, ruthenium, iridium, and gold that comprise the PGM basket. And I think what's important, while we are enjoying these very, very high PGM basket prices, we have been profitable throughout the cycle. It doesn't take too much memory jogging to go back a couple of years to see how low the PGM basket price was. However, we are bulls on the fundamentals around the PGM basket price. And if we just have a look at our year end, which is a September year end PGM basket price, and the increase to date, that is some 134%. Now, when you look at that in the context of our earnings or our EBITDA, we generated a margin of some 27.8% EBITDA during that period. So in a much higher pricing environment, 134% growth, you can imagine what that does to our margin and cash generation. I think importantly, our business is underpinned by sustainable operations. We have a long life, large scale open pit resource. It's mechanized and is a low cost operation. Now, this is key in any industry, but I think more so in the mining industry, where we have so many factors at play and variabilities. Importantly, we have very good labor relations. We have just signed a 4-year wage agreement with the 3 unions on site, which again is quite unique in the South African context. I think the other concern around mining is the consistency of your resource. Are the grades consistent? Are the platinum and chrome contents within your resource consistent? And we've been operating now for over 10 years on site, and we've had no surprises in terms of our geology. I think the third aspect here is control. We have control of our operations. We understand our business exceptionally well. We control our product from the open pit right through to the end market and to end users. Our cost control is in line. Often we see in the mining industry when prices rally, so do the costs. We have a keen focus on maintaining the sustainable competitive cost advantage that we have by running this large scale open pit. Importantly, and really the reason why we exist is really to return value to all stakeholders, and in this instance and for this purpose tonight, to our shareholders. We're very proud of the fact that we've been paying dividends for 5 years, and we will continue to pay dividends as part of our capital discipline and return to shareholders. We're also very pleased on the back of some strong operational performance, coupled with the price appreciation of platinum group metals, that we're able to show some capital appreciation in terms of our share pricing. As mentioned, we're in a very highly cash generative position at the moment, with increasing margins, mainly due to platinum group metal prices. So when we look at the valuation metrics, and we looked at the sort of most obvious and popular one, and we look at EV over EBITDA, we're covered by 3 analysts in London. You can see that our valuation is really we believe we are really undervalued at this point in time, and believe that there's lots of upside potential for shareholders. And, on average, just over 2 times EV over EBITDA. And that's based on analyst forecasts. Moving on now to a bit more detail, we're located in the heart of platinum group metal and chrome country in the world. It's known as the Bushveld Igneous Complex, and it hosts more than 2/3 of the world's platinum group metals and chrome concentrates or chrome ores. We are well serviced by infrastructure, a rail to port, a road network, electricity, as well as additional infrastructure in terms of labor sourcing from local communities. But importantly, the differentiator for us here is that we have this large-scale open pit mine. And it's a unique project in the sense that we're the only mine in the Bushveld complex to mine the middle group reef horizon on a multi-seam layer for both platinum group metals and chrome concentrate. Our open pit life of mine remains at some 14 years. Thereafter, we've scheduled a 40-year underground life of mine, which is only limited by our design. The resource is huge, just short of 860 million tons in the ground, containing some 43 million ounces of 6E PGMs in the resource category and 171 million tons of contained chrome. If we look at the business model, which we refer to as a polymetallic, low-cost, sustainable business model, it's really underpinned by this key asset, large-scale resource. But we also have a portfolio of additional assets that should provide growth for shareholders in the company going forward. I think we're very proud of the fact that the very team that runs Tharisa today were the same team that discovered the resource. We put in applications for prospecting permits in 2006 and were awarded those, and developed this through a greenfields exploration and development program into a very successful, sustainable business model. So the approach has been unique, has been innovative, and at the time of us developing the project, the traditional platinum group metal miners didn't believe in the process, and we're proud today to stand tall to say that this co-extraction of platinum group metals and chrome from the middle group reef horizons is a sustainable business model. I think underpinning all of this is our core value of safety. Safety is not only a priority, it is the core value, and we have one of the lowest safety records in the industry. And coupled with that, we always say a safe business is a healthy business, and returning value to shareholders and creating an upliftment to the communities and the societies within which we operate through the supply chain network, small business enterprises, and so forth. In terms of our fourth pillar, we are looking at diversification into multi-commodity, multi-jurisdiction, but importantly, using innovation and using technology as the catalyst. I mentioned our profitability through the period. Very pleasing to see that we've maintained profitability even through difficult commodity pricing environments and some operational challenges throughout the years. Touching on the safety and sustainability figures, we posted a very low quarterly safety record of 0.606 incidents per 200,000 man-hours worked earlier today at our Q2 production results announcement. And really, we're very pleased with that achievement. However, I think we'll only be satisfied when we reach a zero harm environment. And with a big operation, it's no small feat managing those statistics. We've also been awarded a number of safety awards, 5-year fatality-free, 7,000 fatality-free shifts. And importantly, we focus a lot on education. We spend a lot of time educating our employees. We provide adult education training to the communities within which we operate. And from the outset of this business being a new mining company, not suffering a lot of the legacy issues that our peers in the industry suffer. We set out with the right principles of upliftment and empowerment, but importantly, looking at the impact that our project has on the environment. We have set ourselves targets by 2030 to reduce our carbon emissions. We do report on scope 1, 2, and 3 in our annual report, and focusing on those numbers and reducing them over time is very important to us. So how do you position Tharisa? As at the year end of our financial year 2020, we produced 142,000 PGMs or platinum group ounces, and that really in global terms accounts for around 1.3% of platinum demand, 0.3% global palladium demand, and importantly, 2% of rhodium demand. So we refer to this split called the Pearl split, and that's really the makeup of that platinum group metal ounce. And you'll see that we are heavily weighted towards platinum at 55.4%, palladium at some 16.2%, and importantly, and this is on a 6E basis, 9.5% rhodium, with the balance of iridium, ruthenium, and gold making up the difference. The reason why this is important is when we look at ourselves on a side-by-side comparison on a 4E basis, we have one of the highest, if not the highest, rhodium contents within the Bushveld complex at around 12%. Now, what this means on an in situ valuation basis, we have the most valuable platinum group metal ounce, and you can see that illustrated clearly on the bottom right-hand bar chart, sitting at some $4,800 per ounce. Now, bearing in mind that we have recoveries of just shy of 80% of that, and then we are paid for our concentrate a percentage of that. But just out of interest, the current PGM spot basket price is sitting at over $4,000 per ounce. And just to remind the audience, our guidance of PGM production is up from the 142,000 ounces in 2020 to between 155,000 ounces and 165,000 ounces. And we've given guidance again that we're on track to meeting that post our Q2 production results. Moving on to chrome, which in terms of its scale is the bulk commodity, and it comprises a lot of logistical inputs to move the product from the mine to primarily main users in the stainless steel industry in China and in Indonesia, being the world's largest stainless steel producers at some close to 60% of global capacity. What's interesting is Tharisa is a key supplier into this industry. In 2020, we accounted for almost 10% of all Chinese chrome requirements, and this from a single mine. So no small feat, and a key well-known brand within the stainless steel industry and Chinese ferrochrome industry. Importantly, around 23 to 25% of our chrome production is what we refer to as specialty grade concentrates, and these go into diverse industries outside of stainless steel and command a premium. I think important to note is that the fundamentals around chrome are robust. Annual growth is still forecast at a compounded rate of some 5%, and this equates to an increased demand in chrome units. What most people don't understand or realize really is that China has no chrome resources of their own, and they're wholly dependent on the import of ores, of which South Africa hosts 72% of global resources and accounts for more than 85% of Chinese imports. Prices have softened a bit at the time of the presentation. Prices are around $155 to $160 per ton. Now, on a value basis, on an ex-works basis, chrome accounts for around 25% of our ex-works revenue, and platinum group metals around 75%, really on the back of that very strong PGM basket price. If we look at our Q2 production results and our half-year compounded results, a pleasing quarter. This typically is a challenging quarter due to weather issues. We had extensive rainfall and lightning. Being an open pit operation, we are impacted by weather, but notwithstanding those factors, we still posted a healthy increase in our PGM production, up 11.5%, comparing the prior year, and chrome similarly very, very positive in terms of 15.5% increase from the prior year. So in terms of our first half of the year, slightly behind the annualized target, but we're guiding and forecasting that the second half of the year will pick up to meet those guidance targets of 155 to 165,000 ounces of PGMs and chrome of 1.45 to 1.55 million tons. So a nice increase from the prior year. I think importantly, we are generating a lot of cash, and this can be seen with the cash at the end of the quarter sitting at some $73.1 million, and this up from the prior quarter's $49.8 million. I think pleasing to note as well is that our debt has reduced to some $41.7 million, down again from the $45 million at the end of the first quarter, resulting in a net cash positive position of $31.4 million. So I think just in the final two slides, before we move over to the Q&A, I think we articulate our 6-pillar diversification strategy on the slide, and really it's comprised of 3 focal areas, which is to continue with the organic growth opportunities. I think we've proven that we can extract value continuously through the large-scale open pit mine. We're looking at extending the pit through the far west and west regions, as well as the central pit. We are constructing the Vulcan fine chrome recovery plant as we speak. That is on track for commissioning in September of this year. This is a very important plant because this sees us achieve our 2 million ton per year target of chrome concentrate, and it is unique, and it has been developed in-house in the fact that it recovers ultra-fine chrome concentrates. We are also focusing on fulfilling our 200,000 ounce per year target, and that is through a number of initiatives which will roll out over the next 18 months, and we should see that incremental growth over that period of time. We're looking at downstream opportunities. For those of you that know the company well, will know that we currently sell most of our concentrate to the major refiners and are paid a percentage of that contained metal value. The objective here, through our pilot plant and then growing into a commercial scale PGM smelter, is to beneficiate our own material and capture approximately 15% margin that we're missing. And if you look at that $4,000 per ounce basket price, a meaningful contribution to our earnings through those PGM smelting initiatives. As a large chrome producer, we're looking at various steel alloys and looking at stainless steel as a potential market directly from our ores that we produce. And like most companies in the resource industry, we are looking at battery metal technologies. Now, we need to be clear here, this is utilizing the commodities that we currently mine and applying them in terms of battery metal application. So very exciting in terms of the R&D work that is being undertaken as we speak. We're looking at other opportunities further north. We have options over Selene Chrome, which is a small open pit chrome opportunity, but a very high grade chrome potential. These chrome products command a premium and are more comparable to the Turkish ores, which are low in volume but highly sought after and attract those premium prices. There's a project in South Africa in the Northern Cape of producing manganese and iron ore mine that we also have an option over, which we're assessing and potentially will be a very keen and strategic fit in terms of the end markets that we supply to. And then the very exciting Karo Platinum project in Zimbabwe on the Great Dyke, a very large land package of some 24,000 hectares, presenting itself with a great opportunity to open up a new mine in Zimbabwe on the Great Dyke, producing low-cost, high-value PGM ounces. And we take comfort from our peers that have been operating in Zimbabwe, producing some of the lowest cost PGM ounces, being Impala Platinum, Sibanye Stillwater, and Anglo Platinum. So exciting prospects in the future. And I think, as we always say, we take a measured approach in terms of how we invest, and we have a fairly stringent return rate in terms of our investment criteria. So maybe I can close on this slide. Thank you.
Okay. China buys your chrome. Who buys your PGM, and do you sell direct to end users?
So in terms of our PGMs, Chris, we sell to Impala Refining Services, around 80% of our PGMs. The balance is sold to Sibanye-Stillwater, and then we process some of our own material through our 1 megawatt PGM smelter, and that material is then on-sold to potential users of that product. So with our contractual obligations, I think, which is important to note, is that we will have fulfilled our offtake requirements by October next year, and that will free up those ounces for us to beneficiate and then also market directly to end users, be it OEMs or fabricators of auto catalysts.
Okay, thank you. Okay, sure. Is there any concern in the PGM industry that semiconductor shortages impacting autos production could also impact PGM's demand in short to medium term? Or is the supply deficit of rhodium and palladium so pronounced it should have minimal impact on PGM prices?
So look, it's a very good question and extremely topical. I think, mining is not an exact science, and we've seen with Norilsk's issues in Russia with flooding of their mine that, there are multiple factors that are at play from the supply side, consistency and being able to meet demand and indeed fulfilling that deficit. So I think that the deficit as we sit today is at such a position that we won't see major price adjustment downwards. There is a lot of talk around substitution, and we've started seeing platinum being substituted into the gasoline autocats, replacing the more expensive palladium. There's talk around replacing rhodium, but these things take years to engineer and design and introduce into platforms. And I think the likes of Volkswagen on the back of the Dieselgate scandal have realized that it's not really worth cutting corners or thrifting the system to try and save a few dollars to cheapen your auto catalysts.
Okay, got time for one or two more. Will you be aiming to produce 200,000 ounces of PGMs annually?
That is the target. We've given ourselves around 18 months to achieve that target. The first is being the Vulcan on the chrome side, so achieving the 2 million tons, commissioning starting in September, and then moving on to the 200,000 ounces, or incrementally to the 200,000 ounces.
Okay, and we've got time for one more. Why should we invest in Tharisa rather than in Impala Platinum?
So I think a good question, or any other PGM for that matter. I think if you look at us on a comparable basis, you look at EV over EBITDA, you look at price to earnings, I think we're undervalued. In fact, I know we're undervalued, and I think we've got a very good value proposition in terms of our fundamentals. And I think when we release our half-year financials, it'll be clear to see the cash generation that this business is currently achieving, but also the growth prospects that will add to the basket of revenue and profitability. And I think we're a team that is very focused on returning value to shareholders. So I think purely on the PGMs have run, they've had a very good re-rating in their stock, and I still think we have some way to go to catch up.
Okay, well, that's brilliant. Well, sorry for the obviously the glitches early doors, but we got there in the end. Thank you very much, Phoevos, and we'll say good night to you. Thank you.
Good night. Thank you all. Take care.
Bye-bye.